Hi, it's John Kelly. In this module, we are going to discuss auditing accounting estimates, and in particular, an implementation tool that has been produced by CPA Canada for doing that. And as always, we want to be efficient and effective, follow professional standards, and document what we have done properly. Now, there are three hot topics for regulators and inspectors, and these are professional skepticism, application of professional judgment, and audit of accounting estimates. And they're all really closely related because all of them, particularly accounting estimates, involve making a guess about the future. And when we guess about the future, we will probably be wrong. The other problem, I guess, is as auditors, our judgments will be judged in hindsight, and therefore having good documentation will help us defend the judgment we made at the time. Now here is the implementation tool that CPA Canada has produced, and there's the URL. It's rather long. And as I said, estimates are always going to be wrong, and only the future will tell and can't be predicted. But as when we are wrong, we're going to be judged by the quality of our audit documentation. Again, it's important that we have good audit documentation. So applying this implementation tool to develop our own practice resource to use when we're auditing accounting estimates, not a bad idea. The other thing is they're making something of a fuss. Regulators and standard setters are making something of a fuss about auditing accounting estimates and making it sound like it's a separate part of the audit. And when we look at the tool, we will see that it just recites how anything is audited. But estimates are attracting a lot of attention and they're always wrong. So again, it's a good tip to have some extra documentation when risk of material misstatement is large. The other question, I guess, before we talk about this, we need to think about whether or not auditing an estimate harder will make it better. And the answer in professional standards is in 200A46, and I'm just going to quote it. It says, some financial statement items are subject to an inherent level of variability which cannot be eliminated by the application of additional auditing procedures. For example, this is often the case with respect to certain accounting estimates. So professional standards make it clear, particularly with respect to many accounting estimates, that auditing them harder is not going to make them any better. So given that, here's a little flowchart that we can think about as we decide how we as auditors are going to approach an accounting estimate. I guess the first question is the estimate simple? And if the answer is yes, it's simple, it's depreciation, office equipment, 10-year useful life, that's pretty standard, that's pretty simple. We can just document that on an audit program and nothing much more is needed. If the estimate is not simple, then I guess we need to ask the question, if we spend some audit time on it, are we going to make the estimate better or not? And there are two choices. And I think actually whichever choice we go down here, we may well end up using the implementation tool or turning it into a practice resource because we're still going to have to do some audit work. If we conclude that auditing the estimate harder is not going to make it better, we have measurement uncertainty, and we as auditors will need to make sure that management has disclosed that measurement uncertainty, and we will need to audit that disclosure as necessary. And we might use the practice resource to help us do that. If we conclude, and this is probably less likely, because if management has done a good job, us auditing it harder isn't going to make the estimate better. But if we do conclude that some more audit work will help improve this estimate, we should design the procedures and again consider the use of the practice resource. So in either circumstance, if we're auditing the disclosure harder or we're just making sure that we've disclosed the uncertainty, we will need to adapt the tool probably to provide ourselves with a practice resource to guide our procedures and produce documentation. So the practice resource will be used for either. And the CPA Canada makes it clear that you need to adapt the tool. You can't take it just the way they have it. You'll need to adapt it and produce your own practice resource from it. They list 8 steps, and we can see that most of them, or actually I guess all of them, are required for anything other than auditing estimates or auditing accounting estimates. So it's not that special. First step, obtain an understanding, and we always do that. Our risk assessment procedures and our documentation of that are how we obtain that understanding. We are required for all accounting estimates to do a retrospective review, and that's always required, and it should be in every audit program for every accounting estimate, allowance for doubtful accounts, depreciation, inventory obsolescence. We should always be thinking about a retrospective review. Steps 3 and 4, considering how much uncertainty, assessing risk of material misstatement, and then considering whether or not that risk of material misstatement is significant. We always have to do that for every component. And that's steps 5 and 6, evaluate and audit and evaluate the results. Step 7 is get things in a rep letter, which we always have to do. And step 8, document, which we always have to do, which we could either use our audit program or use the practice resource we produced from the implementation tool. So do we have to use the tool? No. Steps 1 to 4 and 7 and 8 are always needed, and we're going to be doing those anyway. And that should already be documented in our audit programs. However, if any part of this, or in particular steps 5 or 6, are complex, we're probably going to want to use the tool and produce a practice resource and double check and make sure that we've got good documentation. So obtain an understanding. Of course we should do that. That's mentioned in 2 parts of professional standards, and the amount of effort depends on the circumstances, and if risk of material misstatement is low, we don't need much more than we already should have implicit in our risk assessment procedures and audit programs. And of course, if it's more than low, consider using a practice resource. Retrospective review. Now, retrospective review is interesting, and we're probably in an audit going to want to do this on parallel tracks. In the first instance, a retrospective review is a risk assessment procedure, and it produces no audit evidence, but it might point out something interesting, that allowance for doubtful accounts is suddenly way higher or way lower than it was last year, and that might indicate a risk of material misstatement and indicate that we needed to do some more work. On the other hand, a retrospective review is an analytical procedure, and if we do the analytical procedure as part of the audit and as part of the audit program, and with an expectation that the allowance for doubtful accounts as a percentage of 90-day receivables or bad debt expense as a percentage of sales will be similar to last year, and we find that it is, then we have an analytical procedure, and it corresponds to an expectation, and that will give us audit evidence. So if we do it on those 2 parallel tracks, it forms retrospective review as a risk assessment procedure, and also an analytical procedure that gives us audit satisfaction, and if risk is low, that may be all we need. Professional standards note that outcome of estimates are often different, and the tool suggests steps if there are no comparable amounts, and it talks about things like considering the model management uses, considering management's assumptions, consider changes in assumptions, and consider what the auditor's expectations are based on the past. Then we need to consider how much uncertainty there is, and often it's low and the tool is not needed. But things like sensitivity, judgment, observable inputs, and outcome of prior estimates are things we might consider as we thought about uncertainty and risk of material misstatement. And then, as always, we will consider if risk of material misstatement is significant, and that should always be done in assessing and documenting risk of material misstatement. And again, you don't need to turn the tool into a practice resource if it's low, but if it's not, and these are the standard things we would think about: fraud, complexity, related party transactions, subjectivity, is it in the normal course of business? Those are the standard things we think about as we're wondering whether there is a risk of material misstatement due to fraud. We would think about them here as well. And then we would select procedures, and we would consider the nature of the estimate, availability of procedures, and risk of material misstatement. Now, the choices they provide are, I think, obvious. And the first one will be convenient if subsequent events have proved the estimate for us. And probably if it is a complex estimate, that won't be available. If we are worried about whether a large receivable is collectible, and we have more time to do the audit than management had to do allowance for doubtful accounts, well, we find out that 3 months after year end it was paid, and now we don't need to worry about it being an allowance for doubtful accounts. So using subsequent events is a great way of doing it, but that will normally only work for simple things, and that's a substantive test. Second choice is substantive testing, and third choice, of course, is either control or substantive testing. The fourth thing they suggest is using a point estimate or range, which is another kind of substantive test. And I found that useful auditing financial institutions where you've got a long list of loans and you're trying to think of loan impairment, and management will have picked an amount, asked the allowance for each loan, and said, well, it could be 50% or 100%. We picked 80%, and they've done that. I found it useful to add up all the low points, add up all the high points, and then see where management's point estimate fell within that range. And when it fell towards the high end of the range, towards the conservative end of the range, then I would say, well, I'm happy. I'm happy with management's estimate. It's a conservative, it's the high end, the conservative end of the range, and that was a way I found using ranges quite helpful. So selecting procedures is normally not hard. You would document it on the audit program, but if it is hard, you might decide to use a practice resource. And design procedures for significant risks of material misstatement. Here are some suggestions. Consider alternative outcomes, test assumptions, test intent of management by asking them or looking at subsequent events, and using the practice resource again if risk is significant. And we will always consider bias, particularly if it's complex. And if it's complex, we would consider using the practice resource. The rep letter, there are 3 things that are suggested there from 540A126. They should always be in every representation letter, so double check and make sure that they are there for you. And certainly if there were any particularly significant items that you wanted to put in the rep letter, you would. But that disclosure suggested should already be there. And document, of course. And that documentation should either be implicit in the audit program you've developed, or if you've used the implementation tool and turned it into a practice resource where you have a significant risk of material misstatement, then you would document it there. And documentation, as I have said, will help a little bit in forming the decision, but it'll help a whole lot more in defending the decision. And for both of those reasons, documentation is very important. And as I said before also, estimates are always wrong, and only the future will tell, and the future cannot be predicted. And the evaluation of our audit quality is going to be based on our documentation, and well documented is going to be considered to be a well done audit. So we should make sure that we have well documented our consideration of accounting estimates. So, thanks for listening.